Okay, so well, today is the 23rd of April. Now let's look at some trade ideas that I'm trying to develop, and so this is the latest one, Aussie dollar. So let's just click on that. Let's see what's going on. So Aussie dollar basically, the idea is downside. But even though the analysis says down, we still need to be careful on how we decide to enter. And this one, maybe it might just drop. But even if it goes that way, it's not something that I'll be interested in, because there's always this possibility is always there. So it's better to err on the safe side, you see. And chances are, if let's say we took the sell and then flag here, you took the sell, thinking it's going to go down like that. Yeah, but the problem is once this one starts to go up this way, you're gonna get into the drawdown, and by the time this one comes back here, the psychology plays a large part in trading. So if you have a good start, you'll be able to survive this entire move down. So you got off to a bad start, and depending on what the trade management and strategy is to enter and manage trades. A trader's been trading for 2-3 years. Even experienced traders may not be able to survive this drawdown, especially the lot size. If you're trading a very large account, can you imagine being in drawdown, like in 5-digit drawdowns, 30-40K drawdown? So that's just pretty insane. So I think it's much better to wait for a deeper pullback and then try here, and then timing will be much better, safer. If you take a trade because this one broke, that will be a trade by itself, but you could exit somewhere here because that can always happen. That option is always there for the big fish to try to take our money. So I prefer to wait for the pullback. It's better. Even if this was to go down here, and even if it's a break, I still prefer to wait for the pullback. Then you can take this. It's much safer to take this move down, right? Reason why. Okay, so dollar renminbi. Let's look at what's this going on. So it's consolidating right now. Now, so I think the thing people have this in mind is that whenever they see a consolidation, right, the thing is going to go up. See consolidation, thing is going to go up. Consolidating is going to go up. But that's not really true. That's not really true because when this one has gone all the way to the top here, this way, like so, you see, sometimes they look like they consolidate, but it doesn't mean that it's going to go up, and that's where I think confusion comes in. Sometimes when it looks like consolidate, it breaks, it goes up. You see, sometimes it looks like it consolidates, then it breaks, and then it goes down. So if this one consolidates, it breaks, it should break, right? And that is true. So if let's say you was to take a buy, yeah, it's true, but don't forget it's removed quite far. So if let's say you was to take this buy, then I would recommend just how much you tend to risk. How much you tend to risk? You tend to risk this amount. Then you should take that amount because if this one, for this to actually get up there, it's how would I say? It's just it's a possibility. It's a possibility, right? The possibility is there. But however, we have to be willing to take the loss, because if we don't take that loss and this one breaks this way and then suddenly it comes back here, all right? And then no, the stop loss will be here. So people who were in the trade, in the buy, they'll be stopped out right here. Right? But when this one starts, those who don't have a stop loss here, maybe they put it much further, right? So the idea is that they want to give themselves time to get out. So when this one comes here, they hope that this one retraces. And then when this one drops, in order to get this move, right? The idea is that if they took the buy here, they'll be able to exit there. You see. So instead of taking the loss here, maybe they take the loss here. Or if they're lucky, maybe this one comes up here, maybe they can take out for break even. That's one way. But what I think is a safer way would be if you was to take the buy because this one broke out, you have to put a stop loss right here, right? Because the idea for taking this flex is that when they break, they're supposed to go. See, when they break, right, they're supposed to go, right. So this correction here. So when they break, they're supposed to go. So if this one, if you take the buy and it breaks, it's supposed to go. If you don't go, you just have to be stopped out. So when this one goes out, comes back here for whatever reason, comes and then makes a big correction, then here you're supposed to go down. You know. Of course, the other way is that it never breaks out. See, it consolidates, but it never breaks. And of course, this is just looks like correction to go up, but it doesn't. It just breaks to the downside instead. Right. So this one could be correction. It could break the downside. If you don't want to take that to the downside, you can always wait for the bigger one. Wait for the bigger one and then try the bigger one. Right. Even when this one consolidated, it didn't come break the low. So if you entered here and it sells here, there was still a bigger correction here. So there could be a bigger correction. So instead of taking this one, wait for this bigger one before you take the next sell. So an active day trader would be aware that this is the first wave, second wave, this is the third wave, first, second, and third. And if you know, if a trader took the first wave down, they should have the experience to know that this one should be coming, and don't allow yourself to be up like, if it's you have to imagine you're trading a 5, 6, 7 figure account one day, right? So we're doing 10, 20, 50 lots, 100 lots one day. This is going to be quite significant. It's going to be five digits, or maybe 5, 6, 7, 8, 9, $10,000, maybe 40,000, depending on what the lot size is. And you don't want to imagine you're giving back everything. It's giving back everything. If we were trading on a small account, so let's say we're in profit $50, then we get a profit $100, and then it went back. We got a drawdown, and then say from $100 it fell back to say around $30 profit. See, this doesn't feel like much. When we start to multiply that, 5,000 profit became $10,000 profit, and then now because of the drawdown, it became $3,000. So from 5,000, from a 5K profit, so 5K profit, 10K profit, suddenly you get back almost everything, and now became 3K profit. On a small account, you may not feel it, but when it's amplified, once the lot sizes get large, you're going to feel it. So the trading has to be spot on. It's not good enough for analysis to say it's down here. It's not good enough because then you start to factor in the swap as well. The swap is not on our side. Things can go pretty wrong pretty fast when the lot size starts to increase from 1 standard to 10 to 20, 30 to 50, right? So we need to be, if it's the first wave, always get out. With correction, try again. Go, try again. So go, try again, right? So that's the trading strategy. Right? Analysis is down, but how we manage this is important, right? Let's go look at the. So this is a private chart. This private chart is Bitcoin. Something that I it's kind of premature. So I kind of put it on private just for my own study and understanding. So basically, when I put here, is decision point. What this is actually this possible reaction. Now, once it touches this zone, right? Yes, maybe it continues, but the places like this is where you can react, where you can actually drop back to the low in order to suck up more orders, because people in the buy, let's say someone's in the buy like this, right? Where would your stop be? I mean, the stop would maybe be here, possible. Maybe some people would have their stops maybe here. So there are a lot of orders here because this one was supposed to be some kind of resistance right here. So when it broke through, a lot of buy orders are still existing here, or leftover buy orders. So this one might want to come down here, collect. There's a lot of buy orders left here. So when you come here, then you might react again. So these are all just reactions. Now, doesn't mean that you're going to come here and then it's going to swing up. That's not true also, because in order to go up to the upside, you need some kind of correction in the center like this, you see. Now, any movements here, down here, or movement that comes here and bounce up, it does not mean this, it does not mean that. It does not mean anything at all. It just means that if you are trading to the upside, right, you cannot buy it right here. It's at least I would not buy it right there. It's not a good idea to buy it here and try to swing for the upside, right? Any buy here that maybe it's a breakout should be taken out. As you break, you just take profit. As you break, you just take profit, because any point in time, it can just swing back down. So we have to be in and out quickly, especially in this important places where it's going to touch these zones for the very first time. right? So if you take a breakout, you have to exit because just that could happen, right? And I can show some examples on gold, if we can come to it. So at this point in time, if you're looking for a swing, it's best to wait for a strong pullback first, because this is the first wave. Imagine on the beach of Normandy, and the fast boats are landing on shore, and imagine those Marines start pouring out of the boat. Well, the first few are going to get shot, man. So this is the first few that's pouring out of the boat right now. And if you're lucky, it goes. You survive the bullets coming at you. But if you don't, well, you got to know that this can happen, right? This can happen. This can happen. Maybe some lean diagonal. This one just shoots up like this, right? So there's a lot of things that can be played right now. So I would suggest, if we are looking for a long-term buy on Bitcoin, right? Don't go all in. Buy a little bit every time comes to the low. Just buy a little bit, right? If you know time factored swings, then you could wait till it gets really, really obvious. But if you're not so versed into time factored swings and price action, then it's best to enter very small lots, because at this point, these are reaction zones. You should wait for a proper swing before you try to shoot for the upside, right? So at this point, I would suggest just waiting until things become more clear for the bigger swings, right? And this what, at least that's what I'm telling myself at the chart. So let's look at gold. Gold's an interesting chart. I did like the upside when it was over here, as you can see here. So this one meant that I'm look for buys. You see at the bottom. This one here is a look for sells, and then you hold it for 2 weeks, because it's a time factored swing. So if you're looking for the sell, you have to stay in it for a long time. Be prepared to stay for a long time. Anyway, the low, it's the same thing. You need to stay in it for a long time. Now, when it comes up to here, I start not to it's a place to move stops already. You see, you move stops, and then this one came to break. Does that mean that this is going to go down? No, it doesn't mean that yet. Although it's starting to look like that, because it's starting to make this lower lows. And if this was if it was going up, what you need is for this to go here. It has to bring a strong push and then go a little bit sideways, and then go up, like stuff like that. But this is also easier said than done, because this is extremely tricky. We see that it broke the top, it broke the bottom, broke the top, it came down sharp again before it broke. Then it never really went far. So at the end of the day, you still need to be able to. This was tough, and I didn't trade that because it looked very confusing at the time. So what you're just hoping for is something that's not so confusing. You're hoping for something like this, like this, like this. No, it breaks, it hooks, and then it goes. So you're hoping for something simpler. It goes out, maybe here it breaks, here and then it goes, like something like this. That suggests the upside. Otherwise, this is starting to make lower lows. It can be a correction to go up, but then this move is also possible, right? So at this point in time, I will not touch gold. Any sells on gold has to have a deep pullback like this. Then at least if we get stopped out, the stop should be somewhere here. So you want it to do this, like the first wave down. You want it to do stuff. You go up sharp, then you know where your stops will be. At least you can gun for that. So right now, when here was for the sell down, here was a buy up. So right now, this is premature. So I'm just mapping out what's in my mind. So for the downside, this is what I'd like to see. So for the downside, this is what I'd like to see. For the upside, this is what I'd like to see. So I still need to see more before I can decide how to enter for a big swing. So if you're looking to enter like a big lots, 10, 20, 50, 100, right? Or the big lots, you cannot randomly enter here. At least if you any entries here need to be exited quickly. All right, it needs to be exited quickly. What's going on? Okay, so if you enter at the top, your stop immediately. If it's wrong, it's wrong, because you're looking for 1, 2, 3 now, right? So if you entered here, you understand this one could have come here. It could have gone straight up, maybe to here before it starts to go down. So at points like this one, if it's a true motive wave, people who use moving averages, they want to see this one just keep staying to the downside. You don't want to see any big corrections like that, right? You want the correction here to happen, and this is a third wave. If you heard Elliott waves like that, you don't want to see any big waves, big corrections here anymore. no more. So basically, we what we want to see is the big corrections happen here, and when the third wave goes, you don't want to see the big stuff anymore. Don't want to see any of that, right? So so right now, this one could be correction up, could be a starting move to go down. See, it looks like correction, right? But this never went up, right? It actually breaks to the downside. So what you want to see is let it do more stuff, and then we'll once you see something like this, we can start to figure out what to do. Okay, so see all this. Wait for the big corrections, then we'll know what to do. Okay, so let's look at dollar yen. Dollar yen, basically, this one is sells. The safe sell would be something below. See, your trend line, as you consolidate below, then you're looking for the move down. So starting to consolidate, and that's a good thing. There's a friend from Philippines. All right, from Manila. Where did he stay? I was at Makati City once, and I mentioned to him, I think, yes, Erwin. Erwin, if you're there, well, I don't know if you ever happen to come across this, but at that point in time, there was a lot of discussion of this going on. And I told him at the time, no, I don't think so. This is actually coming down. There's going to be one move down here. And well, Erwin, if you're seeing this, I told you this 1 year ago. Forget about this going to break this top, right? So it made a big move down. Right now, if you want this to come down, if you're looking for a sniper entry with huge lots, like you want to snipe a general, big, important target, you have to wait for that. This is a weekly, so wait so here, see, 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks, you have to wait for almost 1.5 to 2 months. And then you got to hold it for 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks. And then you hold on for 1 month. So into the trade, put your stops, and then come back 1 month later. All right. So you put big enough lots, you can, it's very exciting. It's very exciting, right? So, let's look at pound Aus. Pound Aus, yep. So pretty standard stuff, right? Just up and starting to go up now. Okay. So when things go well, there's nothing much to discuss. Let's look at stuff where it's complicated. When things go wrong, that's where that's where the learning actually is, right? So we go to dollar yen. Dollar yen is interesting. Dollar yen's I've been very interested to the downside for the dollar yen. When you look at stuff like dollar yen, okay, let me just see. Initially, what you're looking for is a move this way down. You're looking for something. This is something simple. Something simple. Now, this one was always going to break this low. All right. Now, what's happening now is usually what happens is that when it actually breaks the low like that, it will pull back, and then this one, if it does not go break the top like this, if this don't happen, this is gonna break a hook. You're gonna drop again, right? And looking at this right now, this has a lot of potential to the downside, and it's not only can it drop to around here to 110.91. This whole piece here, this whole level here, is all fair game. It's all fair game. It can drop all the way to here, pull back, it drop all the way down. Because look at that. So it's all fair game, and if this is due to the dollar weakness, that means there's some kind of relation. People like to say the dollar is weak, the gold will be strong, silver will be strong. I do like silver and gold to the upside, so that kind of ties in with what I feel about gold and silver and the dollar. So if you look at the silver, if you look at silver, so I'm kind of looking at this one, 1 and 2. Maybe this one is here, 1, 2, 3. So I'm kind of looking at this. See that? Now this one could just drop much further. It doesn't have to hold right here, right? It could drop all the way down. Go retest this level over here. This would be a really good buy. If it comes around here 14, now you need to put 100 lots on that, and then just walk away from a computer for about 2 months, because there's a lot of potential for upside. There's a lot of potential for upside for this. So basically, what you're looking for is something like that. something like that, right? And even if this was to break the low, it would still you have to survive some kind of drop, but this is still gonna go up here, minimum there, right? So this one dropping here, this is all buys, man. If it drops there, you gotta buy like no tomorrow. If it does that, right? So let's go back to let's go back to pound Oz, pound cat. Where are we? So Bitcoin, pound Oz. What's this pound cat? That's funny. I can't see it. I can't find it. Am I missing something? Gold. Oh, you were talking about this gold at first, right? Yeah. So that's why I like. It's funny, yeah. But if I like silver to go up, and usually silver and the commodities do go up together. So in other words, right, if silver was to hit the low and start to move up, then this one might end up to be a correction after all. You know, it might end up to be a correction after all. This might be a 1, 2, and then a 3 upwards, right? That is very possible, like this. Okay, so what I want to say is that I'm very aware of how the downside will look, you know, something like this. Some correction, like a correction again, a break. So the downside will look like that, but the upside can also look, you see, like this, a break hook, and then it goes again. So basically this one was to go like this, up, break hook, and then go again. Yeah. So at some point, we'll know. Now that I like the silver to the upside, I'm thinking this could be a credit structure. So even though I put the ABC here, there's a chance that this is actually not correct. In other words, it's actually an A here, a B here, and a C. This one actually goes up. But that would happen, we'll know that in about, I think, a couple of weeks' time, right? So, yeah, so that's the thing about gold. Yeah, I think these videos are sometimes saying what's actually in my thoughts is important, because I may draw something, but actually there's something on the other side that's possible as well. Okay, so we talk about dollar yen. So dollar weakness and commodity strength. That would kind of make sense actually. So we do like the dollar to fall. Then this is just a correction. That means this, all right. So not the ABC this way, but the ABC the other way. Let's look at pound. Okay, pound dollars already said this was okay. Dollar yen. Oh yeah, this is where we're talking. This is what we're talking about. Dollar yen. Okay, so dollar to fall. Euro dollar is an interesting one. Now, if you look at euro dollar, I'm going to change it green. This looks like it could have gone. Looks like it's going down. It may look like it's going down, but I don't think that this is the one going down. I think that this is actually a correction this way. And then this will be something that should be going up here. This is a very possible move. Although I think people who trade, the basic stuff, this is something very basic. And but when it comes to actual trading, it's a lot more complex than just that. Than just this. Right? Sometimes this part here can get quite insane. So it takes So right now, what I'm looking for is something more this way up. Yeah, if a person took the sell, around like below this lows here, So let's say if this was to go up, right? Let's say somebody was already in the buy. Where the stop would be here or here. So if they were stopped out, they had to sell their position. So if this one starts to cover the upside, that means the market makers were pretty good. They actually push it. It could push it down to this kind of levels where those retail buyers were forced to sell. So if they sold, someone bought. Some smart guys, some smart money, big funds, they actually buy the low so that they can sell at the high. And that's why it's good that if you can actually see that, all right, there are stops here, but is this truly going down? There are cases where it does that, and then when people sell, they always sell here, they sell here, they sell here. They always seem to pick the bottom, and then price goes the other way. They pick the bottom and price goes here. So they thought that this is trending down, so now this is gonna go down. This was trending up, now it's trending down, so they try to sell it down. This was trending up, now it's trending down, so they try to go down. So, but sometimes that's not really the case, right? And often there's also cases where it does this. It comes here, it picks out orders, and then after that, it flies all the way up to the upside as well. So just because you see a move down this way, doesn't mean that just because it came down here that this is going to go on. That's not true. That's not true at all. All right. That's a complex part about this kind of swings. You see. Okay, so right now what we're looking for is that confirmation that you can actually take the buy. So now this is the tricky part right here. All right. So is this a 1, 2, 3, 4, 5? Now at this point in time is where you don't want to take any more trades, because if this is a first drive, second drive, this is a third drive. At any point this can just flip and then it might drop one more time. So in terms of the sell, to me there is no sell here anymore. Even if this was to drop, you want to make a bigger one before you can take the next move. Because this move itself is dangerous, especially when this has really moved so far, and there's a potential. This is the first, second, this is the third, fourth, and fifth, and these waves are tough to trade. They can go like this, put sharp one up like this, they can go down like this. You'll be trapped everywhere, right? It's just tricky. Now, the upside for me, I think it's the more logical choice, because there's just a few ways this can. Some trading is a lot like chess. You see, you go play against the top grandmaster. They can see, or you play against alpha. What's that chess? AI by Google. It's Alpha Blue. Was it Alpha Blue or versus Stockfish? Alpha Blue, algo versus algo. There's always a more superior algo. So in this case, what I'm looking for this one to go up like this. And the correction, I think this is a good buy towards the upside. This trend line here would become something like this, and then it becomes an A, a B here. This is actually a C, right? That's one move, potential chess move that could happen, right? Yes, this could also be that. This one I don't want. This one I don't want. I want this bigger move to the upside, right? Because this one, there's a lot of weird plays you can do before it actually goes, and it's best not to trade that. And euro dollar is not that volatile, unless you manage to get it at the top or the bottom. But if you diddle around in the middle, that's a bad idea, man. Right? The potential to lose money is high. Right? A good buy would have been something like this one. When this one broke something like this one, this would have been a good buy because it's strong sideways, and you know that there's a lot of room for this to actually play. There's room to play over here. You see, so right here, this is not something that you should play unless maybe a lot size is small, right? And you just put a scout entry and just see where it goes, just to remind yourself that I think I'm interested in the buy. If I get more confirmation, my 0.01 lot, or there's a micro lot, says, hey, I'm positive now, maybe this has gone up and it's making a pullback like this, then you could look for position at the position to actually go up. So I'm interested in the upside. Or in this case, if it goes to the downside, not so keen, because I'm afraid that this just drops here. You may study this kind of earlier wave. They just drop. Maybe they do this and then they go further, or maybe they just drop here and then just spin right up. It's ugly. So I would not trade this to the downside right now. I'm looking for the up. Okay, so euro dollar. Let's look at some things that actually was quite nasty if you don't wait for confirmation. And if let's say if we get aggressive, that's what can happen. Right. I think this is a very good example. So we should study the things when things go wrong, and don't exactly go our way. See? So you expected that, you expect that. But this move could happen like this, and A, B, C that could happen, but that could happen as well. Right? And this C never breaks that A. Right? This move can happen as well. Right? So right now it's still a sell is still a better idea than a buy, right? Because you cannot ignore this move is pretty strong. It's pretty strong, and in any case, any continued move upwards needs a bigger sideways as well, right? A bigger sideways, something that this dollar Swiss they make some quite severe corrections. This was kind of scary, severe correction. So if there's any sell here, it would have been a severe correction for a person to get out anyway. And even if this was to come back here and continue down, that's why I say, psychologically, it's timing is very important, because even if this was to continue down, a trader who entered a sell here will not be able to take this sell down. It's quite impossible. Your lot size is big enough, and your swap it's all messed up. The swap is negative, and then you're paying a lot in swap. It's hard to take the trade if we time the entry wrong, basically. So even if this entry was to come here and down somewhere, I guarantee you anybody who entered here will not be able to take that. They will not be able to survive the entire move all the way down, because they've already been drawn down. You see, in fact, if they could even get to here, that would be really good. A better idea is to if anybody was to sell here, is to, when it comes here, try to hold on a bit longer, and try to hold on a bit longer, and then get out somewhere here. If it breaks, it makes a pullback, then you can sell, basically. But after a move like this, you have to be very careful. See which way the credit structure is before you decide to take the trade. But right now, this one, you should look for the sell. Right? Dollar Swiss. Okay. Okay, so this is something that I did. Dollar ruble. So I'm just going through stuff on the front page. Yeah, and that's why looking for breakouts is an important thing. You see, looking for a strong break is important. See, hold on, see, like a 1, 2, 3 is important. Now, the 1, 2, 3s, they are also not equal. They can be 1, 2, 3 like this as well. This looks more for downside actually, instead of a 1, 2, 3 up. So 1, 2, 3s are not equal. Right, so if you pair something like this is like a reversal. This down looks more like a continuation. All right, continuation. So being aware of the time factor is important. All right, so the time factor for this 1, 2, 3 took a long time. This 1, 2, 3 time factor was really short. It shows a lot of buying strength, right? This one was a slow crawl, so towards the upside, 1 to a slow crawl like this. So just take note of that. So what you want to see is strength actually. So right now we're not getting any buys. You're looking for a swing, not getting it yet, right? You're looking for a swing. What kind of swing? A swing to actually break that, at least to break this. It's what you actually want, okay? So you want some kind of confirmation. So if it crawls, this could be a double bottom. So let's just see what it does. Double bottom often results in a 382. It comes around here, then it pulls back, then you can take that buy. So this actually all looks upside for this ruble. All right. Okay, so press for time. I'll just go through something interesting. This one was Kiwi dollar. So these are all the time factor for these trades, right? They take around 1 to 2 weeks to mature. All right. Now, if you look at this one, the idea for this is actually, to me, is actually down. It's not up here. That's why I put this cross right there, because I do not think that this is actually going to go up. There were some calls for the upside, but by people that I know, not that I don't think that this is going to be broken. I think this is going to be broken. Ultimately, it's true, but the timing is important, right? Even if you took the buy here, then ultimately this actually went, it's not good enough because again, when it comes to trading, right, trade management and entries are important. The analysis is one thing, but did it go up here or did it go up here? Saying that it went up ultimately and being a huge drawdown here, I think is not good, not optimum trading. So and when it comes to paying negative swap, that's no joke. When it comes to big lots, don't be in drawdown of 40, 50K. It's pretty insane, I think. Okay, anyway, timing is important. All right, timing is important. So what would be the safe sell for this one? be, if this was a five-way, you will look for upside, big correction, then you look for one more down. You often hear LA wave, right? One, two. This is standard stuff, right? Something up, and you're looking for one more. So that would have made this sell much safer. Makes a safer sell. Now, there were a few options this could have developed actually. If this had gone up and broken that, then that would have said, oh, this was what it was. But that's kind of tricky. In order for the upside to happen, you still need this. You still need something a bigger correction to go for the upside. And also, this could go straight up. That's true. If that was the case, then I would have missed the trade. If it gone up here, made a pullback here, I would consider to buy to the upside. But for me, at this point in time, when I actually drew this, nothing about it said it was going up. Right? If this had done something like this, then I would have drawn that. But at this point in time, I don't see that. So I can only draw what I see. To me, this whole thing still looks down, right? And that's why there were points where people said this was going to go up. Well, this could have been upside here. This one could have been, but you see, it never broke. It didn't go, and then it continued down some more. So anybody who had buy thoughts too early buy thoughts like here too early, they are going to be drawn down already. All right. So like I say, you trading micros, minis, one standard, it doesn't matter. If you're 100K, 200K account, you can survive. This one can go all the way down, it still go up. But once you start to trade for real, and lot size starts to increase, you want to avoid this big loopy, and then it goes up again, because you start trading for people. I tell you, people don't like to see that 40, 50K drawn out. You need to avoid that stuff. If you're trading for your own family, your wife, well, make sure you're a good trader. Otherwise, you don't want to lose your family's money, or people will say, hey, why you lose my money? You see your wife every day, or your father-in-law, or your mother-in-law, or your dad or mom, right? So there's still a lot of potential to downside. Unfortunately, for this one, there's still no upside. Is there any upside here? Do we see any upside here? It's all downtrend. So there's no point in thinking about up when it's all. If the downside look okay. So let me just go through it again. If the downside looked, if I was specific, if I had down thoughts here, and that was a bad idea, well, it doesn't look so bad now, right? So and the conversely is, I mean, on the opposite side, if the buy looked like a good idea here, the buy will start to look like a better idea once you get to the low over here. So let me just do that again. The buy will look like a very good idea somewhere here at the low. Somewhere at this low, this is a very good idea. You see here? Because even though this is a strong move, and I do like this top to get broken, but never forget, remember the dollar twist? This stuff can do some weird stuff and break this low, take out the stops, and then it starts to go up. That also can exist. So just because you see something like this, does not, the bias is up, but don't let a bias analysis determine the trade, right? Because at the end of the day, you still need some kind of entry to try to get in on the trade, basically, right? Some kind of entry, some kind of style to and be willing to stop out if you're wrong, right? So if the buy here look like a good idea, as it comes to the low, the buy side looks even better, right? And not for people to make money in this industry. Those big funds, right? They need people to get. Someone needs to lose money. So people like the millions. I mean, all the traders in the world, they offer the liquidity for these big funds to swap their positions. So imagine if we were in a buy. So there are a lot of sell stops over here. So we need to be stopped out. So if we were in a buy, and then say some of us buy here. This is going out. We buy. This was a correction. We buy. Well, we put a big stop loss, and then imagine getting stopped out right there. So when we buy high, we sell low, we lose money. So who bought here? who's the guy who can see all the cards, man? Imagine you go to the casino and then the casino knows what his cards are. He knows what your cards are. They can see where the orders are. They can see where all the orders are. Can you imagine coming in to low here, force everybody to sell low so that they can buy low and then they can sell high? Does that make sense to you? Somebody is buying low and somebody is selling high. So that's a big fish. So we are the little plankton here. We're just the little plankton here. We have to follow them up. And hopefully, when they decide to make the push, after taking out all these orders, then now that's when they can go. So this looks like a great place to move price before, so that you can buy low and sell high by taking advantage of the poor fools over here. Okay. All right. For that, I'll just end it here and trade safe. Bye bye.